Ladies and gentlemen, I am honored to speak at the annual general meeting of the Association of Cypriot Banks. I've had this honor before and would have wished to be physically present in Cyprus, but unfortunately the COVID pandemic is not behind us yet and travel is still difficult. For me, it is especially important to speak to you as the Cypriot banking sector is particularly important for the European Banking Federation, as it is a highly condensed and professional financial system in Europe. That means that you have all the challenges and opportunities that are so significant for the near future of the European financial system, and it will also have a profound impact on you yourself in the Cypriot banking system. Since 2020, when we were hit by the COVID pandemic that still continues to this day and beyond, the Cypriot banks, like many in the European banking system, have shown their resilience. Moreover, banks stood firm with their clients to weather this very difficult storm. And as the storm is not yet over, banks will continue to play their role in a responsible and pragmatic way. Nevertheless, it is very important on a day like today to look also at the challenges ahead. Today, I will highlight three of the main challenges that we see coming from the European perspective, and which unsurprisingly are also three of the main pillars in the European Banking Federation strategy. One of the main issues I'm working on every day is the implementation of Basel III, the capital agreement in European legislation. As we all know, this will have major implications for the way in which we deal with capital in the European banking system. I cannot stress enough that the effects in a bank-funded economy like the one we have in Europe can be dire if implementation is not done wisely. It must be done in the spirit of the Basel Agreement, but take into account the specific needs of the European economy. This is all the more important in a time that banks are expected to play a main role in the post-COVID recovery. Before the summer, the European Banking Federation commissioned a study by the renowned Copenhagen Economics Institute that calculated the additional capital required by the European banking system to 300 to 400 billion euros if we do not allow for implementation in a smart way. So this is what we are all working on. So having said that, whatever the outcome of the negotiations of the implementation, even if we do it in the smartest way possible, we know that banks in future will need to keep higher levels of capital. Knowing this, it is vital that we work closely together in deciding how to deal with economic recovery. We need to ensure that good companies after the pandemic can flourish and have the best access to capital, whereas bad companies need to be dissolved in the legally proper way by bankruptcy. Moratoria and forbearance measures have given a lot of temporary relief and are still giving temporary relief. But they also have a direct and negative impact on capital levels at banks. It is of the essence, and that is we, all of us, our political leaders, but also the banks and our clients, strike the right balance between financial stability and recovery. And this is a very important responsibility. But having the right levels of capital and liquidity is not the only challenge that banks will face in the coming years. Like the rest of society, the financial system will play an essential role in the sustainable transformation of the European economy and society, while at the same time dealing with a fundamental digital transformation. This is what the European Commission calls the twin transitions. And we have and the Commission has launched a multitude of legislative proposals that will have far-reaching consequences on the operation of all of our banks. But first, let me talk on the sustainable transition of our economy and the strategic significance this has for the banking business. You have no doubt noted the latest IPCC report this summer. The report asserts that human-caused greenhouse gas emissions will continue to drive unprecedented weather events that we unfortunately saw this summer and will disrupt human life and biodiversity for generations to come, with devastating effects unless we halt this trend. In Europe, the IPCC report assessed that this will invariably lead to an increase in hot extremes, rising sea levels leading to coastal flooding, thus posing real threats to coastal communities, and even more. The financial sector will play a crucial role in the funding of this transition to halt the trend. The deep knowledge of risk management that we have in our banking sector and the closeness that we have to our clients, businesses and consumers put banks in a pivotal position to help the green transition. We need to note that this transition has to be done in an urgent but orderly manner to ensure success and popular support. It also means that we need to transform our risk management business to include more than just financial data. The scale of the challenge is also evident from the perspective of real hard numbers. According to the estimates of the European Green Deal, Europe will need an additional 350 billion in additional investment per year to meet the Paris Agreement, and an additional 130 billion for other environmental goals. In terms of achieving the Sustainable Development Goals, recent OECD figures show that the existing $2.5 trillion funding gap from private finance has been further exacerbated by economic repercussions of the COVID pandemic. So this means that European policymakers are making efforts to translate these funding gaps into a legal framework. The EU, in their ambition, will become the first continent to become climate neutral by 2050 and to reduce greenhouse gas emissions by at least 55% by 2030, the Fit for 55 plan. As a key piece of the puzzle, the European Commission has indeed released the Fit for 55 package, which is a complementary effort to the sustainable finance agenda and which will ensure that businesses set clear and feasible transition plans. Within this context, and as I said before, banks will play an important role through their investing and lending activities, as well as being big employers of a significant workforce. Regarding risk management and operations, there will be more granular sustainability reporting requirements for both banks and their clients as of 2023. And banks will need to assess the degree to which their balance sheets reflect exposures aligned with the taxonomy, and the European Commission is examining preferential capital treatment for certain kinds of banking products. All this is coming towards us. Consequently, we are at a regulatory tipping point, which presents challenges and opportunities. And we, as banks, will need to work together with the public sector to ensure development of a cohesive and practical regulatory framework that will continue to enable meeting the goals of the Paris Agreement, as well as being, and this is very important, socially and economically sound. Beyond just regulatory compliance, banks have already responded to the challenge of meeting these goals with commitment, innovation, and enthusiasm. The significance of voluntary initiatives like the Principles for Responsible Banking, which have 230 major banks as signatories, have already demonstrated the conviction within the industry that sustainability is a core part of banking business and its longevity. The recently announced Net Zero Banking Alliance represents banks covering a quarter of global banking assets, that is over $37 billion, and it is a crucial movement in the alignment of lending and investment portfolios with net zero emissions by 2050. I can talk about sustainable transition for hours, while I have with you only minutes. But there can be no doubt that the issue is on top of the agenda in Europe and beyond. Further to all that banks are already doing themselves, we can expect far-reaching regulatory requirements that we need to anticipate and absorb. It is essential that the European Bank Federation continues to be an integral part, together with all of you, in the process to come to a European regulatory framework that will enable banks to support the economy and society in this important transition in an optimal way. But let me now continue to the twin in twin transition. Banks all over the world, and most certainly European banks, operate in an environment of spectacular digital transformation at an incredibly fast pace. For the banking industry to successfully tackle its future, it needs to be innovative and come up with user-friendly digital services to its customers. And it needs to compete at all levels with non-banking actors, like big tech, who have become part of the financial ecosystem. Also, we need to find ways to work with them when they act as providers of critical digital services to the banks. It is especially noted that in the foundation of successful and sustainable digital innovation, the basis lies with cybersecurity and resilience. These are the only means to ensure trust between banks and customers in the digital sphere that is so essential. Regulators and supervisors are trying to revamp and create new regulatory and supervisory frameworks for banks and other emerging market players in finance to operate under. But it has become clear that new goals cannot be pursued with all tools. If I look at the environment in which banks today have to operate, there are a number of main characteristics. The first, of course, is that banks are designing new service solutions, following all our customers' demands for fast and innovative services. They are so used to do everything on their phone now that they require the services that fit what they need. And that requires rethinking of opportunities as much as there are challenges. For example, the data and digital infrastructure of banks are fundamental aspects to think about. Who creates them? Who controls them? And how do we shape an ecosystem that places the client in the center? Consumer protection and legal requirements need to function similarly effective in a digital world as in traditional finance. And new offers such as crypto assets cannot operate in a void, but require an updated scope of regulatory requirements and new and effective rules. Furthermore, it is important to take note of the move of the big tech players which I mentioned. By the creation of vast data pools from various services, such as social networking, in the past 15 years, they have been able to acquire a controlling interest in a number of sectors already. Moving into financial services, first in the payment sphere, they can leverage these data assets to offer targeted financial services under different conditions than banks, benefiting by this from an on-level playing field. This asymmetry in rules and supervision needs to be addressed to uphold consumer protection and to create a fair and competitive market, and ultimately, financial stability is based on the role of banks in intermediation and in lending. Then if I look at the regulatory and supervisory framework, it needs to increasingly look towards the pan-European and global level to harness technology applications that are by their nature borderless. Fragmentation of rules is detrimental and inefficient for digital innovation. The EU takes a lead in policy and legal discussions and can inspire and steer answers to digital transformation as a front runner. And that is what the European Commission and the European authorities need to do, but they need to include the banks in the discussion. Finally, the COVID pandemic has accelerated and continues to accelerate the need for digital solutions and infrastructure. We are also used to doing things digitally now. We all work from home, and as today, we have conferences from home in my case. So this underpins the need to create an operationally resilient and cybersecure ecosystem where financial institutions can safely and under fair conditions use third-party providers to offer innovative solutions to customers. The pandemic has triggered trends where speedy answers are of the essence. The share of digital payments rose and the industry adapted the limits for contact payments, and this worked perfectly. Massive remote working possibilities were needed, allowing for secure data access, shared communication and data storage. The use of third-party infrastructure was crucial to enable remote working, including layers offered by tech companies and several sub-providers in their supply chain. As you can imagine, at the European Banking Federation, these developments are of the utmost strategic importance. In 2021, we are leading in the work crypto assets, central bank digital currencies and the digital euro, the data economy, open finance, cybersecurity, digital operational resilience, and ensuring a level playing field with big tech are part of our daily work. And again, repeating myself, essential work. Your expert views on all these issues are continuously fed into our work by the Association of Cypriot Banks and by you personally, and they are most welcome and needed. We need to develop a common understanding in this unprecedented and highly disruptive era to ensure the ability of the banking sector to adapt and to compete. If I may conclude this part with one striking example, the advent of the digital euro can have a fundamental impact on banking business models and financial stability. Therefore, it is essential that banks are represented in the discussion on the need and design of the first ever European central bank digital currency. Ladies and gentlemen, I am proud to say that over the past year and during the pandemic, the banking system has shown to be resourceful and resilient in getting through this crisis, and we will continue to support our clients and the economy. However, it is important to note that banking is rapidly evolving in ways that we have not experienced before. To continue to play our role and to adapt and develop, banks need to have the ability to keep capital and liquidity at rational economic levels. At the same time, banks will need to fund, support, and act in the sustainable transformation of our economy with all the challenges that will come to us with it. Finally, the more technology provides new tools, the more customer expectations will change, and more banks will need to reinvent themselves and their products to stay competitive and profitable in this brave new world. We at the European Bank Federation will continue to work with our members, like the Association of Cypriot Banks, as a crucial European hub for debate, knowledge sharing, and thought leadership. We strive to create a European regulatory framework that will support our banks towards a competitive and a successful future. Thank you very much for your attention.